fear is extraordinarily contagious. And we saw that in September of 2008 like we've never seen it before in financial markets. You're going to get in line. And if the president of the bank comes out and says, our capital ratio is 13%.
Warren Buffett, the Oracle of Omaha, is a name that has become synonymous with long-term investing. For decades, his decisions have shaped markets, inspired investors, and built one of the most successful portfolios in history. But even legends like Buffett don't stand still. Each quarter, Berkshire Hathaway unveils its latest moves, buys, sells, and strategic shifts, offering a rare glimpse into Buffett's ever-evolving investment strategy. In this video, we'll break down the changes in Berkshire's Q3 2024 portfolio, analyze the rationale behind them, and explore what these moves mean for the markets and investors like you. Let's start with the new entrants to the portfolio, companies that caught the attention of Buffett and his investment officers, Todd Combs and Ted Weschler. First up, Domino's Pizza. With 1.28 million shares worth $550 million, Berkshire's stake in Domino's isn't just about pizzas, it's about how Domino's dominates its sector. The company has revolutionized fast food with its cutting-edge digital infrastructure. Did you know that Domino's generates nearly 75% of its orders through its app and website? That's not just a pizza company. That's a tech powerhouse disguised as a food chain. This move aligns with Buffett's strategy of investing in businesses with strong brand equity, predictable revenue streams, and the ability to adapt to consumer trends. In a world where convenience rules, Domino's checks all the boxes. The next new addition might surprise you. Pool Corp, with a $152 million stake. Now, why would Buffett bet on a company that sells swimming pool supplies? Think about it. During the pandemic, outdoor spaces became a priority for homeowners. That trend hasn't faded. Pool Corp benefits from a growing emphasis on outdoor living, especially in warmer regions. Plus, it's a market leader in its niche, giving it pricing power and a loyal customer base. Lastly, Berkshire added to its stake in HEICO, an aftermarket aircraft parts manufacturer, bringing the position to $214 million. The aviation sector has been on a gradual recovery post-pandemic, and HEICO is uniquely positioned to capitalize on this trend. With airlines focusing on cost-effective maintenance solutions, HEICO's specialized parts make it an indispensable player in the industry. Together, these buys showcase Buffett's balanced approach, investing in both emerging consumer trends and traditional industrial strength. Now, let's shift gears and talk about what Buffett and his team have been selling. The sell decisions often reveal as much about Berkshire's evolving strategy as the buys. Let's break them down, company by company. Starting with Apple, the cornerstone of Berkshire Hathaway's portfolio, the team reduced their position by another 25%, leaving them with 300 million shares worth $69.9 billion. Despite this reduction, Apple remains Berkshire's largest holding by far. The reasoning here is likely tactical. Apple has surged on AI optimism and new product launches, and Buffett is known to trim positions when valuations get stretched. But make no mistake, Apple's ecosystem of loyal customers and its consistent cash flow ensure it remains a top pick for years to come. Next, Bank of America, which has long been a Buffett favorite in the financial sector. Berkshire reduced its stake by 23%, with the position now valued at $31.7 billion. This move could be tied to rising interest rates and macroeconomic uncertainties impacting the banking sector. While Bank of America is still a substantial holding, this reduction highlights Buffett's cautious approach to financial stocks in a shifting economic landscape. Berkshire also trimmed its position in SiriusXM by 21%. This is interesting because, just in the previous quarter, Berkshire had significantly increased its stake by over 260%. The current stake, worth $2.5 billion, reflects a more balanced stance after the earlier aggressive additions. Satellite radio remains a niche industry, but SiriusXM's strong subscriber base provides steady revenues. This adjustment suggests that Berkshire is reassessing the growth trajectory of this business. Capital One also found itself on the chopping block, with Berkshire reducing its position by just over 7%, leaving it at 9.1 million shares, worth nearly $1.4 billion. While Capital One has shown resilience in consumer lending, rising delinquency rates in credit markets may have prompted this cautious cut. Another significant trim came in New Holdings, a Brazilian digital bank. Berkshire reduced its stake by more than 19%, leaving it valued at $1.2 billion. Inu Holdings was a relatively recent addition to the portfolio, established in late 2021. This reduction could signal a reassessment of the fintech sector amid global economic headwinds and increased competition in digital banking. Berkshire also reduced its position in Charter Communications by about 26%. The stake, now valued at $914.5 million, represents a significant decrease in exposure to this cable giant. With traditional cable businesses facing mounting pressure from streaming services and changing consumer habits, this move reflects the challenges in the media and entertainment sector. This one's a surprise. Ulta Beauty, added just in Q2, saw a massive 96% reduction in Q3, leaving only $9.4 million invested. What's behind this drastic cut? While Ulta remains a leader in the beauty sector, it's possible that Berkshire underestimated competitive pressures or found better opportunities elsewhere. Lastly, Berkshire eliminated its position in Floor Decor, a specialty retailer of hard surface flooring. The position, worth $395 million as of June 30th, is now entirely gone. Floor Decor operates in a competitive retail environment where economic pressures can impact consumer spending. This complete exit could reflect a strategic decision to allocate capital more efficiently. Together, these moves highlight Buffett's adaptability. While the sell-offs may seem extensive, they represent calculated decisions to manage risk, optimize returns, and focus on high-conviction investments. Despite these adjustments, the foundation of Berkshire's portfolio remains unshaken. As of September 30th, 2024, the top 5 holdings represent a staggering 70% of the portfolio's value. Let's take a closer look at these giants. Apple, AAPL, $69.9 billion. American Express, AXP, $41.1 billion. Bank of America, BAC, $31.7 billion. Coca-Cola, KO, $28.7 billion. Chevron, CVX, $17.5 billion. These are not just investments, they're cornerstones of Buffett's philosophy. Apple's consumer loyalty, American Express's resilience in financial services, Coca-Cola's timeless brand, and Chevron's position in the energy sector highlight Buffett's focus on durable businesses with strong cash flows. One unexpected twist this quarter: no Berkshire stock buybacks. This marks the first pause since 2018. Buffett has always been clear: buybacks happen only when the stock is undervalued and excess cash is available. This pause suggests that Buffett may be holding on to cash for better opportunities in what could be a more volatile market ahead. So, what can we learn from all this? Buffett's portfolio changes reflect a blend of adaptability and discipline. Whether it's adding innovative companies like Domino's Pizza, trimming tech giants like Apple, or sticking with core holdings like Coca-Cola, every move is deliberate, calculated, and deeply rooted in long-term value. As Buffett famously said, the best investment you can make is in yourself. So, keep learning, stay curious, and remember, investing isn't about chasing trends, it's about understanding value. Thanks for watching. Don't forget to like, subscribe, and hit the bell icon for more insights into the world of investing.